Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Wednesday, May 15th, 2024. CPI came in cooler than expected. Month over month, we saw 0.3%, whereas the last and the expected for April was 0.4% month over month. Year over year, came in as expected at 3.4. Interesting how that works out. And then for core, CPI came in cooler than the last and as expected. And this is different than the last few CPI reports, which were coming in hotter than expected, giving markets a little bit of nervousness. So, if you've been watching this show, you did hear me say, if you've been paying attention and watching all my shows, that I predicted that this would come in cooler than expected, but mine's more from a more zoomed out view of where we're headed into the medium time frame, and I kind of expect this to turn into a trend where it keeps going down and down. The Fed's not changing. They're not cutting yet. It hasn't happened yet. And then once the cuts do come, it takes 14 months for it to have an actual effect in the markets anyway, and that's when things are too late. That's why we always have a bust, which you need a bust. Like I've mentioned many times on the show, it's not actually as horrible as it is, and to say it's necessary for bad credit to get wiped out. It's important. It's for the better of all of civilization that we have markets that go up and down. If everything just went up all of the time, that's when you have hyperinflation, and all of a sudden people have wheelbarrows of money that they're using for fuel for fire. So it's coming, but today markets are happy and greedy. Gareth Soloway on his show mentioned he saw that volume was very light today on this gigantic solid green candle today. This was just a heck of a move in the S&P 500 going up 1.2% and to all new time highs. Now this is where I need to point out where my crystal ball has had it wrong. I said that this past high here in March, I thought that this was the top, that we weren't going to see another leg up, and no, we're seeing another leg up. Now how far can it go up? I don't know. When I take a look at the triple Qs, I mentioned that I saw this head and shoulders pattern here, and it's playing out that way. We broke out of it, and I said, well, it looks like it wants to be bullish. My target here is 470. However, I'm not going to participate in it. Like I've been saying, this is for me. I can't chase dumb money with dumb money on this scale. I mean, I've done it before. I was lucky enough to get in on some call options with Trump. What was his social truth media or something. I found out a little bit before all the rest of the retailers found out, and I got it right away because I knew that the retailers were going to jump in on it massively. It was like a fresh new thing, fresh people, and it soared. And so there's certain times I will gamble based on situations that I feel like I can most easily take advantage of, like that. But I'm not going to be participating in this, especially hearing Gareth talk about how the volume is so low. It's like when you have low volume on a high up day, what happens is you have institutions trying to sell into it as much as possible while allowing it to continue higher until the music turns off, until this thing turns around. But there's no other way to put it that's bullish. I mean, helping markets out a lot is TNX, the 10-year yield. I've been talking about this for weeks now, how especially since May 7th, I guess that was about a week ago, We had this engulfing candle, and it engulfed the next 2 days, and then we broke lower, and I said that we're breaking. It looks like it wants to break down here, and with a cool inflation report in the CPI, it would continue to break down. And this is exactly what's happening. I'm very happy to take advantage. You know, the great thing with treasury bonds is that it has two functions. It functions as, like, if people are not afraid of inflation going as high as badly, then yields can go down and treasury values go up. And when people are, like, scared that the economy is coming to a halt and companies aren't going to make money, that lots of companies are going to default, yields and treasuries continue to go down. And so you get both, you get two things that can push up the value of treasuries, and with them being so low priced from a historical standpoint, from a very long historical standpoint, like hundreds of years standpoint, and then also more recent history, past 5 years or so, rates have been so much higher than usual. This just seems like a very unloved best opportunity, as I've been saying. Now that this is falling off of a cliff, the yields, I believe I have I have 50% of my portfolio in long treasuries now, specifically ZROZ and TMF, triple leveraged. They're similar to TLT, but they're stronger, let's say. I always like to take a look at, in situations, what's going on in high yield corporate, and of course there is a little disagreement here. We're at new all-time highs in the S&P 500. However, in HYT, high yield corporate, we're not seeing that happen. You know, on a closing basis of this green candle, I mean, this is a red candle here, so if you're going to take a closing basis, well, I guess that is the higher high. I guess it depends on how you look at it, but this candle is nowhere near looking as bullish as the stock indices, and so I'm gonna say this can still be a top here. I might be repeating myself for a while if I keep going this way, but no, there's no fear. CNN Fear and Greed Index, we're back solidly into greed here, and the VIX, very engulfing candle of 1, 2, 3, 4, 5, 6 days, are within the solid red candle. This is very bearish for the VIX. You know, I'll be very surprised if this continues to go down lower, but as far as the chart pattern goes, it looks like that's where it wants to go for the moment. I mean, you know, the truth is that the VIX is sort of required to beckon to the will of dumb money, because it's based on the price of what the securities are going to be doing. You know, if they're going to be going up comfortably, then automatically, and the markets know that, and I know that, and they know that, then the VIX can continue cooling off. The prices of options can they can get cheaper. So, you know, speaking of dumb money, Bitcoin, you know, if you count this as a channel, we had a very bullish day today, and we broke out of what you could interpret this as a bull flag here. And so, you know, if we were to, for example, use this as the pole, let's see if this one will work. Somehow nothing's working. Okay, that's better. Sometimes I have to reload the page. So if you count this as the pole and this is the flag, then you expect this length here to be the same length here. So, you know, we're looking at, you know, maybe this wants to go up to 90,000. Again, I can't participate in this, not with what's going on. You know, I like what's going on in treasuries right now. And like I'm saying, when this bullish craziness ends in stocks and things start really going the other way, if they go the other way, what often happens is people pile into treasuries, driving the yields down further. So, you know, I see the greatest reward with the lowest amount of risk still right now in Treasury bonds. So anyway, that's just me and my crystal ball. Hope you enjoyed. Thank you for watching. Robschild.